The following is a presentation of TFNN. It is now time for the Diagnostic Trading Hour with your host, Darrell Martin. Now, Darrell Martin.
All right, folks, welcome on here to the Diagnostic Trading Hour. I am your host, Darrell Martin, and we're right here on TFNN. Make sure you listen to us at tfnn.mobi or watch us and our screens live at tfnn.com on Tiger TV. And looking on over and seeing what's going on, make sure, of course, I always want to let you know if you have any questions about futures, forex, stock, options, binary spreads, the market in general. Definitely feel free to give me a call. You can reach me right here at 877-927-6648, and that's 877-927-6648. And as we do each and every day, I want to go ahead and keep you updated on where the market's sitting at right now. We got the S&P up 1.5. We got the Nasdaq down 6. We got the Dow up 17, and the Russell down 90 cents. Looking on over at gold, it's down just a mere $3.50 from yesterday's close, and a pretty nice, move there. It's a whole $3, right? So pretty flat right now from yesterday's close, and but did definitely have some major down movement before coming back up. We'll be talking about that in a little bit. And then on copper, it's up. Basically, it's flat. So copper, silver flat, really even gold flat right now. Okay, and we'll come back. We'll pull the deviation levels up, check about that out. And then over on corn, we got corn down 4 points. We got the soybeans down 10. And we got oil down 48 cents. And natural gas up almost 4% on the day. Literally, just massive moves. So we've been seeing, these ags and energy markets doing some crazy things. Natural gas, on a daily basis, just going nuts. Looking on over at our forex, flat. So euro dollar right now, sitting at a 0. Okay, no change on the day. Pound dollar down 2 pips. Aussie dollar down or up a pip. U.S. yen down 8. U.S. franc down 7. U.S. Canadian up 22. So basically from yesterday's close, everything's sort of just flat winding out. Nobody's making any real big bets one way or the other. Right now, you got Obama sitting down with some CEOs and talking to different sides of Congress and trying to figure out what they're going to do about the fiscal cliff, and nobody wants to totally sell it off, and nobody wants to completely buy it up either. So everybody's waiting to find out. If they figure it out, yay! If they don't, then just bring on the crash. There are, of course, all sorts of proposals out there. I read like 12 different scenarios the other day, and one of the ones being that they may get the Republicans to agree to closing tax loopholes to get the Democrats to agree to leave the tax rates the same. I honestly don't see the Democrats doing that. And, basically it's a game of chicken. And all I know is I'm glad I trade the markets because I can make money down, I can make money up, we can make money flat, right? And that's also why I trade intraday. I'm not big on long-term trading right now. So, you can go in and do it, but I don't care how good your stock is doing. If they raise tax rates and we go off the fiscal cliff and, Spain blows up, it's going down. Okay? There are the rare stocks that will go up. But in the most part, it's probably going down with the rest of the market. So I would rather get in there, make the money, get out. And, whether it's on a daily basis or whether, I traded for, 25 minutes this morning, I was done. It's very simple. Just traded the gap fill trades. And, you don't have to trade all day just because you're an intraday trader. You can trade at night. You can trade right around news for 30 minutes. You don't have to trade for 8 hours. In fact, I don't recommend doing that. You'll probably have a heart attack. So, you get in there, find your specific trades, have a whole playbook. And I talked about that on one of the previous shows, having, that strategy, system, style, and self. And the systems are your playbooks. So your gap fill trades, your news trades, your trend trades, your swing trades, your correlation trades, all those different trades that you can do out there on the market, just having that whole book of plays, and then just knowing when to use the book. If you're going to do a straddle, you're obviously going to do it around news. You're not going to do it on a no-news day when the market's not going to move. If you're going to do a gap fill trade, when are you going to do it? When there's a gap, right? So, just some things that you need to keep in mind. But definitely have a playbook. Don't just have one play. Imagine a football team with only one play. how well do you think they would do against all their opponents? Okay, the market is not the same every day. Scenarios change. Markets gap. News comes out. News doesn't come out. Huge economic things happen. So things change. The market changes. You need different plays for different scenarios, just like you would in any sporting event, okay, or any combat. You can't just have one way to win a war. I mean, you got to have different things. You got ground, land, air, sea. You got everything combined, and you even have little facets inside that. And so you got to put it all together. And that's a lot about what we talk about here in diagnostic trading. We go into, like I said, the strategy. Just knowing what your tools are, okay, what your rules are. And then going into your system. What are your plays? What are the different moves you can make? What are the different trades, the different types of trades? Not just buying and selling, but a whole variety of trades. And then you got to know your style. So how do you know when to execute which play? And then you got to have yourself, which is you got to master risk management and the psychology of trading. And half the book on psychology of trading is on risk management, probably 3/4 of the book. And that's why I trade Nadex. If you don't have an account at Nadex, you definitely want to check it out because it is 100% risk management control. Okay? Meaning every trade you do, you can't lose more than what you put up. And no matter how far the market spikes against you, you can't lose on the trade. All right? And that's the way to trade. Like when I traded the gap fill trades this morning, I used Nadex to do it, okay? And I went in, and you could have done it on spreads, you could have done it on binaries, either way. But I went in there, and literally, like per contract, we're talking a $15 risk, okay? And obviously, I did more than one contract. I mean, you could do 3, you could do 10, you could do 100, whatever. And then when it moves, and you close it out. So when it fills that gap. But if you try to trade a gap fill trade with a future contract, I mean, you're a little nervous. Things can spike down against you. And but if you're on Nadex, it can spike against you all at once. If by the end of the day it comes back up and fills in that gap, then you were profitable. And if we want to look over at the gaps, I mean, right here I got them up, and we can see. Let's see here. I'll back out a little bit more. There you go. There we see them right there. We see those lines. So market closed at 4:15 yesterday. All right, and then it opened up down here at the cash market. Now I know the futures trade all night long. All right, but the stocks don't. And the market exists to fill orders. That is the only reason the market exists. Okay, think about it. If you go to the market, if you go to the grocery market, you go there because you expect to find bread and milk and, meat or whatever it is that you're buying. You expect to find it at the market at a price that you think is agreeable. Okay? And when Wonder Bread or, some milk company comes out and, Borden delivers milk, they expect that when they deliver their product to the grocery market, that there will be people who will come that will want to buy it. All right? So the grocery market is then going to buy it. The market maker, it's the guy that owns the grocery store, okay? He is the market maker. He buys it from Borden and Wonder Bread, okay? And he sells it to the person who comes in to buy the groceries, all right? The trader, all right? They're going to trade their money for the actual product. He makes the bid-ask spread, the difference between where he bought the milk and sold you the bread. If you go there and there's no bread, you're going to stop going to that store. You're going to go somewhere else. If you go there and it's too expensive, you're going to wait until it's on sale, or you're going to go somewhere else. Okay? If the bread guy delivers and nobody will buy his bread because it's too expensive, then he's either going to lower his price or go out of business, right? So what happens is you, the buyer, and the maker of the bread come together on a price consensus, plus a little bit of spread in there for the guy who's bringing you together, because you don't want to have to go to 50 different companies to buy your groceries. That's why we go to a market. We can get everything done at once, okay? So we go to Walmart, right? You can get everything. So, whether you want to get a kayak or whether you want to get an apple, I mean, it's all there. And so that's what markets exist. They exist to fill orders. If they don't fill orders, if any grocery market doesn't fill orders between the supplier and the consumer, they will go out of business. So if markets exist to fill orders, and we know this, that is the only reason that markets move. Okay? Now, there are reasons that people will pay more or less for something, and that will drive the price up and down. But paying more or less means that they'll fill an order, right? They'll place an order somewhere. So, if, whenever, obviously, the issues that have and are still happening, and, our prayers are definitely out there with everybody in the Northeast, but where, things are more expensive, like, water and food and things like that, because people are willing to pay more for something. So when there's a gas shortage, people will pay more for gas. So there's reasons that people will pay more or less, but at the end of the day, it all comes down to where will they place their order. Okay? If you know that, there's different types of people that will place orders for different reasons. People will place orders based on the charts, the technicals. Okay, it looks like it's moving up, moving down. People will place orders based on statistical deviations. Usually this is very advanced traders, hedge fund managers, or just traders that know they need to use in a deviation levels, like what we post. We post implied deviations every day over on the diagnostic section of the website there on TFNN. And you also want to have, you got fundamental traders. Based on news, trades will fire off. This is good news. It's bad news. It's good news. The market will go up. I'm going to buy. It's bad news. The market's going to go down. I'm going to sell. So they're going to place the orders based on those events. And then you also have the seasonal traders. Okay? So, there are seasonal things that take place. I talked, a couple days ago about the one on the payroll cycle. Other ones such as, gas should get more expensive in September and heating oil should be sort of cheaper, right? So a few months ahead of that, you could actually be looking to buy the September, gas contract and sell heating oil because people are traveling, but they're not heating their homes. So just that seasonal cycle can affect the price. So there's all these things that go into trading, and that's diagnostic trading. That's putting all four of them together. So why and where do people place their orders, and that's how you get one step ahead of the markets. Well, on a gap, the market closed, the market opened, there's a bunch of stock limit orders that haven't been filled. They want to fill them, okay? Now, if the gap is massive, like 20 points on the S&P, don't bother, okay? And there are things you need to filter. You don't just want to take every gap out there. But the basic premise is there's orders that need to be filled. And so when the market opens, you either buy the future, or you buy the Nadex spread, or you buy the Nadex binary. If you buy the Nadex spread or binary, you can do it with limited risk, and the market could keep going down a little bit. Like right here, if I zoom in on this, you can see, let's see, I'll maximize the sell here. Like if you would have bought immediately, it actually dropped down, a couple points on you. So same thing, if we go over here, we'll back up. If you would have bought right on the open, let's say on the Russell, it would have been at 786.2, and then the low over here would have been down to 785.3. So you'd have been risking like about $900 a contract if you would have bought the Russell, whereas you could have done that for a mere $15. If you had $900, you'd have made a fortune over on Nadex. Stay right there, folks. We'll be right back after this commercial break.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
All right, folks, welcome on back here to the Diagnostic Trading Hour. And we're just going through several things, and we're talking about strategy, system, style, and just putting it all together. And what we want to do now is go over and just look at, like I said, we had the gap fill trades. So the markets went in. They opened up, Russell moved down a little bit, and then filled the gap. And then basically the trade on the gap fill is that you get out when the gap fills. Okay? So, yes, you can make more. And if you want to try to trail it, I mean, good luck. I mean, this thing would have stopped you out anyway. Then you get out. But, usually you want to get out right when the gap fills. And, by the way, a gap fill, okay, a true gap fill is measured from settlement price, not from the last trade you see on your chart, which can vary, by the way, by charting platform. So you want the settlement price of the futures market. Where do you find that? Okay. Well, it ought to be a setting in your charting platform. But if you want to see it just directly on the exchange's website, you could go over, say, to CME. And so if I go to products and trading, go to Globex, hop on over here to equity indexes. Okay. CMEgroup.com. And then scroll on down. I want to check out the E-mini S&P. So I can open that up. I could also check out the NASDAQ 100. I could also go on down here and check out, where is it at? Here we go, the E-mini Dow. And that opens up, and then there's a little page that says settlements. They post this about, I'd say, within 15 minutes or so of the market closing down. And you'll see the settlement price is $13.7825, and then over on the Nasdaq, we got a settlement price yesterday of $25.81. Now, sometimes these will be the exact same as your charts, but sometimes they'll be a couple points off. Okay, settlement price of $12.780. All right, last on here is $12.767. So that was definitely a different price. You want to base it on the settlement price. Why? Well, that's how floor traders do it. That's how institutional traders do it. That's how the big boys do it. All right. So, sort of a rookie mistake, just not knowing something. You look at charts, but you don't want to just look at the charts. So we go over here. So even if you're over here on your Nasdaq chart, all right, and my last trade price over here shows a close of 25.81.75. Okay, so let's see here. Is that right? Wow. Yeah. So I mean, that's definitely different than what you would see and what you'd expect on the gap fill there. So we got let's see, you mean Nasdaq 25.81, yeah, 0.75. When really I should be shooting for 25.81. So I could be shooting for 3 more ticks than I should be. Okay, which means what if it goes to the gap and then falls? I missed out on the trade. So we can go over here to the Dow and look at that right there, and we can see the last trade price on that. The close there, 12.779 is what's showing up on this chart. And if I go over here, then I'll see 12.780. So not a big difference on that one. And I mean, look at how they actually have. That's the last quote there. But, I mean, CME shows the actual last final trade was 12.767. So the reason they have a settlement versus simply a last trade is, well, I mean, that's a pretty big difference. There's like 13 ticks between the last trade and the settlement. It was on the bid side. That's why it says B. And that can sort of throw things off. And so they use settlement for mark-to-market, basically whenever they're closing out and figuring out your profit and loss for the day to change, basically pull money out or put money into your account. That right there, that settlement value is what they use, okay? Whenever there's option expiration, to define whether or not an option, and this has nothing to do with Nadex because they all settle in cash, and so do equity indexes. But whenever they're figuring out option expiration, like calls and puts on the futures market, they're using the settlement price to determine whether or not it was in the money or not. Because if it's in the money, they'll automatically exercise it. Okay, and so that settlement price. The settlement price, what they're doing is they're taking basically the trades from the last 30 seconds. Okay, and they do volume weighting. So for every price it traded at times the number of shares or contracts traded, and then they add that total number up and then divide it by the total volume that happened during that last 30 seconds, and they get the settlement price. So that way it's a balanced price. So the majority of the shares were traded right around 12.780, even though there may have been like 1 or 2 trades down at 12.767. So that way this, it balances things out for you, and very, very helpful. And then, of course, over if you want to do the Russell, you're going to go to theice.com. And on the ICE, you go over to products. And then go on down here to, let's see, we got Russell indexes. And you can scroll down, and we'll find the Russell 2000 Index Mini Futures right here. And let's see here, we can scroll down and see daily settlements. Click on that. And let's see, we can scroll down, and we'll find it. Here, I'll pull it right back after this break. Okay, right there.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. You've heard Tom O'Brien on the air, and you've seen him on Tiger TV, as well as being featured as a regular CNBC guest and contributor, and now you can have access to his expert trading advice each morning through his daily trading newsletter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, gives traders, investors, and money managers a thorough strategy for trading stocks, options, and indices every market day. Market Insights comes out each market day before 9:30 a.m. and provides traders with Tom's daily commentary, opinion, and specific trade recommendations on the markets. Using advanced Fibonacci methods, volume indicators, Gartley patterns, candlestick charting, gaps, and market timing, Market Insights will give you specific trade recommendations including entry, stop, and exit prices. The summer is over and traders are back. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
All right, welcome on here to the Diagnostic Trading Hour. This is Darrell Martin, and giving you a call to let you know that the markets are flat. So nothing going on real big here, but we'll go ahead and check them out. One thing we were going over there was the settlement of ICE. So on ICE over here now we got daily settlements, ICE futures, and you can go in here and Russell 2000 mini index. Okay, and so I'll post that over there in the Tigers Den as well. And got that one up. Okay, so now what we can see, wow, not available for the. Okay, so we want the historical on here if it'll show us that. They're not even showing the historicals right now. Let's see here if they'll give me daily settlements, all. Let's see, they're not even posting them for you. So that's fun. But usually they do post them right there, and you can see them. And get the historical, end-of-day reports. Maybe over here we'll get it. We'll try this. There we go. Okay, total volume, close, price, change, settle. Yeah, there we go. All right, so December 2012. Settlement price right there, and 79.220, so 79.220 as your settlement price. So you can find them again. Let me show you where that is. Right here under end of day report, and November 12th, Russell 2000 electronic, and then you hit that, and then you'll be able to see the actual settlement price posted versus simply the last trade price. And again, I'll post that up in the den, so you can check it out over there if you're over there and look at it. It's one of these things you really need to understand and know. You need to use this whenever you're calculating any kind of pivot level. I don't use pivots, I use deviations, but if you are doing that, then you need to have this down, so you need to know what settlements are. All right, so let's go ahead and check out our fundamentals. That's one of the things we always check out here on the Diagnostic Trading Hour. And last night we had a few things go on, so we'll go ahead and pull some charts up and check them out, and I'll go over each thing. Like I said, Obama has all sorts of meetings going on this week where he's meeting with the unions, he's meeting with the CEOs, he's meeting with, both sides of Congress, and we'll see if anything productive actually comes out of that. But, I don't know. It's one of those things, just keep trading it as it keeps moving. All right, so last night we didn't have any major reports really coming out besides, of course, the Eurogroup meetings are, in place, and they are disagreeing, which is not giving the market a whole lot of confidence either on how to handle Greece. Even though the Troika has sort of given a thumbs up and Greece's parliament has voted yay, Germany's like, we really aren't going to pay more money, so let's figure this out a different way. So they're going to have to figure that one out. And we don't really know what the final is going to come up, but they're going to have sort of a collateral loophole that they're going to put together to have enough cash to roll the billions of debt. So it'll be interesting to see how that entire thing rolls out. All right, so let's go ahead and check out what came out this morning here. We got, Tuesday. And we have the German Zoo Economic Report, 5 a.m. And that was one of the reports I said you definitely want to be watching out for. Comes out Eastern Time and came in worse than expected. Negative 15.7. That's not really a good indication for the euro. And so if we go right over here, 5 a.m., we can see there was definitely a drop. It wasn't really big, though. I mean, it was almost, a non-event, 13 ticks down. And then the euro decided to fly on up this morning, right here at about 6:30. And there wasn't any really big major news conference that came out. It just flew up, and then it flew back down, and flew up, and flew back down. So it's sort of an interesting overnight trading. And if you were trading this, you probably would have got stopped out, unless you're using something like Nadex. But it's not really, the move looks massive, but, it's not a horribly massive move. I mean, we got 12670 to 12730. So, but overall, if you look at where we closed and to where we're at right now, we're basically flat on the day. We also have core retail sales coming out of New Zealand tonight, 4:45. We got the federal budget balance report coming out at 2 o'clock. Probably not going to have too big of an impact. Last night, we did have the CPI report over in Britain. So that was a big one for the evening there. And we can check that out. That came out at 4:30. And right here at 4:30, boom, 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 boom. There we go. So 4:30 CPI report came out. It came in better than expected at 2.7 versus 2.3. And so when that came out, you can see the market came up. They came down to whip everybody out, flew back up, and then pound dollar fell down and basically is flattened out for the day. It almost looks like a Friday, It's almost the filling of everything. And so, yeah, I hate getting stopped out. I don't want to get stopped out. So I don't get stopped out ever because I trade on Nadex. And on Nadex, you won't get stopped out. You can go and you can trade the pound dollar, you can buy, you can sell, and it's impossible to get stopped out on it because there are no stops on a Nadex trade, and which is pretty cool. That's the reason I trade it. So if I go over here and pull up, let's see here, the Nadex platform, I'll show you sort of how this works, okay? And we go in here. Let me move a few things around. All right, so, all right, we'll get rid of all of this. Doesn't really matter. Don't need all that. All right, so if I go in here and I want to trade on, we'll just say the S&P or the Russell, because remember the Russell, when it opened up this morning, it dropped first. I can go in here and I can choose say a bull spread, okay? And I go to small cap right here in the morning, and the market's, sitting right around 790. I can buy on that trade. And what it happens here is my risk is $23 on the trade. I cannot lose more than $23 on the trade, period. Okay? And I can go over here, and so no matter what happens. So if the market drops below 790, I can't get stopped out my risk is capped at, again, $24, okay, if I got in the trade right now. So I can't lose more than that. And that's huge. In other words, no matter how far, if the market goes down to 788, 787, 786, I can't get stopped out. I'm still in the trade, and I can't lose more than $24 as long as it comes back in my direction before the market closes. And so you go over here and pull up, the chart. Let's see here. Let me refresh that. There, I got so many different things going on with the connections. There we go. So you can go over here and check this out. No matter how low it got, it couldn't drop below 790. Okay, so this morning, looking at this trade right here, the market came down, but I knew, no matter what, you're not going to lose more than, let's say, if you got in right here, okay, at let's say you got in at the highest price listed, 792.2. Okay, so $22 risk. I knew that no matter how far down the market went, I couldn't lose more than $22. If I did 10 contracts, I couldn't lose more than $220, no matter what. So the market comes down, and if I go over here, we'll pull up a chart on the Russell. And look what happened. The market actually dropped all the way down to 785. Okay? Well, if I was going to ride that all the way down, that'd be a massive loss, 785. And you might be willing to take a hit. And so you wouldn't have to take that hit. So again, if we go on the, let's see, if we set like maximum here, so 787 down to the low, 787, what, 0.3? Was that right there? So we got a high of 787.5 down to a low of 785.3. All right, so that's basically 2.2 points, which would be $220 minimum risk there. Okay, and that's if you had your stop one tick below that. Any more, and you would have been risking more money, would have been stopped out of the trade. This one doesn't matter if it goes below 790. I can't lose more than I put up. Okay, and the market goes in my direction. I can close it out just like I would on the future. So I could buy this spread, all right, on the market open. So I could have bought it right here at 792. And I had a gap fill target over here, so right up around 792, that I could actually get in on the trade, and I could sell it off as the market rose up. And so when it got up here, 795, you could have done that. There's a lot of different ways you can trade it, but no matter what, you can buy it just like you're buying at the underlying market. And if you feel this spread is not the right spread for you, you can go in and find a different spread. And that I'd say is the challenge on Nadex, is finding the right spread. So if you've watched the show at all and I've showed you, some of the different challenges, you're going in here, and these are all the different spreads you're choosing from. Okay? So the spread you probably would have chosen would have been, it could have been the daily here at 790. That may not have worked for you. You may have tried this one, 780. That might have been a little better trade. Why? Well, because it would have given you more profit potential on the trade. So you can see you could have came in here at 830, and you could have bought this trade at like 780, 789. Okay? But you got to go through and you have to evaluate every one of these spreads to figure out the right spread. So I didn't want to do that. I didn't have time to do that. When I'm ready to make my trade, I usually want to make it within 30 seconds to a minute at most of me figuring out what trade I want, and maybe a couple minutes, if I'm really analyzing. But once I figured it out, like within 2 or 3 minutes max, and I do it within a few seconds, I'm able to go in and place my trade. And so I was like, how do I do this on Nadex? Because Nadex is taking so much time to evaluate, what do we got? 3, there's 3 here, and then 6, 9, 12, 13 spreads I got to figure out. So what I did was I was like, all right, I'm going to get this thing built in live. And by the way, we also have now, we automatically update the deviation levels live. So it feeds right in to the site there. But I made the spread scanner. So, and on the spread scanner here, you can go in and I can choose the market. So I go small caps, and it'll show me, all the spreads that are available. So there's all 13 on the buy and all 13 on the sell. So really 26 spreads we're looking at. If I'm like, well, I want to buy, and I don't want to risk more than $100. I just want to trade the small caps, and I want to have at least a $2 profit potential for every $1 at risk. Then it shows me the trades that line up for that. And so I have a couple trades, and I can see how far they have to move and how long I have. So I got basically 3 trades out of, again, if you had the 13 on the buy side, the 13 on the sell side, out of 26 possibilities, I've now narrowed it down to 3. And all I had to do, and literally, if I restart, okay, I literally hit U.S. small cap, buy, 100. By the way, this saves it, so next time you come, you don't even have to re-enter this stuff, okay? You can just change it. down to 3. So literally in a matter of like a couple seconds, boom, there we go, done. And I go, okay, well, I got 13 minutes on this one. It has to move a point to be at break even. It has $6 of risk, can make up to $60. Okay, well that's decent, but it only has 13 minutes, so probably not the trade I want. I can filter out that trade if I want to, just by like saying, okay, I want at least 30 minutes to expiration. So now that trade's out of the way because I don't want ones that are going to expire in the next 5 or 10 minutes, unless I'm doing some sort of scalp trade or something. And then, okay, now these 2 trades, this has 148 minutes. This one has 148 minutes to expiration. This one only has to move a point to be at break even, or 1.2 points to be at break even. And this is probably one of the most valuable things in the entire scanner. 1, saving you time so you don't miss the trade, but 2, making sure you pick the right trade. 1.2 points to break even on both of them. $25.80 risk on both of them. Okay? Same time to expiration, same distance to break even, exact same risk. This trade has a $171.20 profit potential. This trade has a $207.20 profit potential. By the way, I actually factor in the exchange fees and everything for your risk reward. So that's already done for you. Why would I choose this trade when I could choose this trade? This has a $100 more profit potential. There's no reason to choose this trade. And if I chose this trade and the market did decide to rally, okay, and move up, then I'd be giving up $100 of profit potential for no good reason whatsoever. And there are days, not that it happens every day, but there are days when it happens. And if you just catch one contract, okay, it basically pays for the entire scanner. Just one contract out of the entire month where it does actually do that rally for you, pays for the entire thing. Okay? Not to mention, it helps you find the trades, analyze the trades, and do everything, and basically take what could take you anywhere from 30 minutes to an hour doing manually, or just giving up and doing it sort of a quick way, but not necessarily getting the best, lowest risk spread. But also, it can pay for itself very easily. And, when I put it together honestly just for me. That's why it took so long for us to get it into the sites. Because I'm like, I love the spreads. I love not getting stopped out. I hate getting stopped out. It's my number 1 pet peeve. And I guess my number 2 pet peeve is having a winning trade turning into a losing trade. So by trading Nadex, I don't ever have to worry about getting stopped out. And to help me from having my winning trades turning to losing trades, that's where I tie in the deviation levels, because they help me know when to take profits, set stops, and look for reversals. And they're very, very helpful. So these are the deviation levels right here for the day. And we base the settlement on yesterday's settlement price of the contract that Nadex is following. And we go in here, and the futures contract month is used the same way in the platform. And we round them off to how Nadex quotes. So that's there's a couple of disclaimers down there. But they're very, very, very accurate. And they're very, very helpful for figuring out where the markets are going. So if I go over here to say, we'll go pound dollar. And I look at the deviation levels over on pound dollar. And I see, hey, how high did it get if I was trading it last night? Okay, because it had that positive report come out. It went on up to, a high of 1.5914. Well, what was our deviation level? Well, we had when it hits 1.5903, it said tighten the stop. Okay, and then it also gave a further tightening of the stop at 1.5912, and then again at 1.5925. So when it hit this 1.5913 up here, we're able to tighten our stop and get out 1.5904. Otherwise, we would have given back all of our profit and possibly had a winner turn into a loser. So the deviation levels are about helping you keep your winners by having proper expectations. Stay right there. We'll be right back after this break.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil's subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to check out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday, Wednesday, and Friday, 11 a.m. Eastern, on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
All right, welcome on back here to the Diagnostic Trading Hour. This is Darrell Martin, and we're going through and just sort of checking everything out right now, where everything stands on the deviation level. So we saw a pound dollar pulled right up to that 0.7 deviation level, which gave you a perfect trailing stop, and market fell on back down from there, so you protected your profits. Let's hop on over. We can check out oil, and oil did have a bit of a move on down there this morning. And let's see, let's turn off. Let's see. Go in and we'll, there we go. And, see, I don't think it quite did it. Do it one more time. That's what we needed. Okay. All right. So oil moved on down there from the open. We had a low, looks like, of 84.57. Over on the oil deviation levels, it went down to 84.86 was where it said to tighten the stop. So definitely would have been a good place, and expect a reversal any point around that, all the way down to 84.34. We didn't quite hit down to 84.34, but that would have let you know if you were short oil last night where to expect a reversal. Now on the other side, we can go ahead and check out some of the other markets here. We got gold. So silver, let's see, natural gas was a big move. Let's check out natural gas. So absolutely insane move today. Moved all the way up this morning to, looks like a high right now of 3.739. And so if I go over and check out the natural gas contract, then that actually moved up 0.71, 1.5, 2. Deviations didn't hit the 3 deviation levels at 3.780. But it did hit that 2 deviation, so when it hit 3.710, that means that basically means tighten your stop. So 3.710, it hit it right here. So we would have been trailing our stop at this point and got stopped out right about 3.713. So a great trade right there, great apex setup all the way across the board. And I mean, you would have caught, over 2 deviations of profit. So that's absolutely awesome. And again, helping you protect your profits. And right now, it's just sort of flat once it hit that point anyway. So no reason to still be in. Hopping on over, and let's look at, corn. Let's see, I don't think we had any kind of big, massive movement on corn. But it moved on down to like 710 or so there. And we'll go ahead and check out soybeans. Let's see if we can find some movers today. Nothing big there. We'll look on over at our silver contracts. Okay, we got a little bit of a spike up to 32.83, and 32.77 would have been the first mark. 32.87 would have been the second mark. So it came pretty close to 32.87, but didn't quite hit that. And so about 4 ticks off. Looking on over at our copper markets, we got to move down and a move up. On the copper markets, we've been looking for a move below 1343.4 to tighten our stops. We definitely hit that. And then on the upside, so if you're playing the reversal trade here, which, I mean, it just flew up, would have been looking for a move on up to, it's like a high of 3.4985, and we had 3.492 would have said tighten your stop. So basically in this bar, tighten the stop, that would have been a perfect place to tighten the stop on the reversal. So the deviation levels, just again, the whole point is, what is the expected move in the market? And, why do they work? Well, they're not based on standard deviation. They're not based on historical movement. They're not based on pivot formulas, which are based on historical open, high, low, close, etc. So they're based on the future expectation, the implied volatility built into the options, extracted out of every single market individually, and then factored into a deviation formula. So it's implied expectation of movement. And without it, you feel like, honestly, once you start using them, you'll feel like you're blind without them. Because, I mean, the number's in your face. There's no interpretation. There's no trying to figure out, which way the line wiggles, okay? So it is, here is the price. At this price, this is where you want to tighten stops. And time and time again, day after day, right on target. And got great reports coming in, people that are loving them, and they're helping them a lot in their trading. I hope you all have a great day, a safe day. Join me at the Traders Expo in Vegas. I'll be there tomorrow through Saturday.